to Advanced Trading Part 2. I hope you guys are as excited as I am about this stuff because, guys, this stuff is so addicting to me. If you know how to do this and you know how to enter into trades and exit trades, I mean, you can just stack up money every single day, especially if you've got, 3, 4, 5, 6 good coins that you're trading. A couple don't have to be active, but if you're diversifying, and this is just a tip for you, if you're diversifying, and I'd say 4 to 6 coins is good because that way you don't have all your eggs in one basket, but you're not so unfocused that you have tons to manage. It's kind of a happy medium, but it's just so addicting, and you can really create a lot of income. And it's one of those things where we're all about creating time and money. That's the age-old problem. You either have time or you have money. You either have time or you have money, but you don't have both, and for some reason most people think they can't have both. Well, you actually can. I spend maybe 20 to 45 minutes a day, maybe up to an hour sometimes, looking at trades. And with everything you're going to learn by the time you're done, you'll know how to set up notifications, you'll know how to live your whole life so you don't have to be glued to your computer. And if you see a trade opportunity, you're going to get a notification on your phone and boom, done. But right now, we want to talk about advanced trading. So first off, I want to talk about what we call double bottom and double top patterns. So in here, I have brought up Dash Coin, and we're specifically zoning in on March of 2017 to September of 2017, about the end of September. What I'd like you to see is the double top, double bottom pattern. For this pattern to occur, you first have to have a breakout. So we can see here in November, we don't have a whole lot of volume in here. We really don't have a whole lot all the way back in September. But we don't have a whole lot of volume in here, and the market's not really being tested too much. Not a whole lot of buyer support, not a whole lot of seller resistance, not a whole lot going on. And all of a sudden, the buyers start buying up the coin. They start buying up the coin, and I can remember actually back in here, Bitcoin came into 2017 at $750, $760. It went up briefly, and then it came back down. What could have happened to spur this in the market here was the fact that Bitcoin had gone up to $1,000, and then it tanked back down to about 700, 760 for a brief moment. So you could have had the novices get scared that it held Bitcoin and then come over to invest in altcoins when it started going back down, and it started a bull market. So you had a breakout. You had a breakout. Very good opportunity to buy in here. And one of the things we've talked about, remember, please write this down. Remember historical levels of resistance and support. Do you see where I'm at on the chart right now? Right in here. Do you see historical level of support and resistance? Historical level of support and resistance. Historical level of support and resistance. You see this happen 3 times. Right here, and right here. What does this mean? This means that the market tends to sustain itself right here. This point right here, this point right here, and this point right here all would have been good opportunities to buy, to enter into a trade. All would have been great opportunities to buy. You could have had a little mini sale right in here. You could have bought back down at this historical level of resistance that you would have known was bound to happen again because you'd recognize it in the past. Bought here again, made a profit. Bought here again, and we see a historical level of resistance. But then something else happens. Something else in Bitcoin and the value of Bitcoin coming down. I remember what happened here. I remember owning several Bitcoin for about $770 in here. It went up to 1,000, and I thought, oh gosh, now I got to pay $1,000 to own a Bitcoin if I want to own it at face value. Well then, right in January, it tanked again by about 25%. That probably scared some people, brought it over. Media said start investing in altcoins. People started buying up altcoins, and that's what we saw happen on this breakout here. Huge, 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 huge opportunity. So a breakout happened. In order for a double bottom, double top to occur, there first has to be a breakout. So we see this breakout. We see this breakout from a historical level of prior resistance and support, which we find here and here and here. It's very apparent. We see this happening from a February 2016 to a December 2016. We see this hitting these historical levels of resistance and support for 10 months. By then, somebody should get the memo, especially reading charts like you know how to do now. You'd understand this. You'd have invested somewhere in here, anticipating there might be a breakout. Breakout happens. Sellers start selling right here. They see a huge opportunity to sell. Sellers start to sell, it buys back down the market. Got a lot of buyer support going on, a huge amount of volume and buyer support going on, buying up the coin, buying up the coin. And then we've got a drop. Market can't sustain itself. Sellers are selling out, devaluing the coin, massive supply available, and it tanks again. So we have our first point of our double top right here. So in order for a double top to happen, or a double bottom to happen, you first have to have a breakout. So our first point of entry into this double bottom, double top is right here, where the top is. It tanks down, finds a level of resistance and support. Tanks down, finds a level of resistance and support, tanks down, finds a little resistance and support, comes back up. What we're seeing here, keep in mind, you can see it's gone, a little bit down, a little bit higher, a little bit lower on this bottom side a couple times. It doesn't have to be 100% accurate. You kind of have to look at this chart on a slightly more vague scale, for lack of a better word, and you have to just extract the information I'm about to tell you. What a double bottom or a double top signifies is it oftentimes is the pattern that will be created when the market is being tested. It's being tested to see if the market can sustain maintaining a higher level or breaking through a new level. So what actually happened here, and we need to kind of almost wait and see what happens in the next few days, few weeks here, is that we had a breakout occur. We had a massive pump, a massive bull market trend, and then we had the sellers sell and capitalize on that, buying back down the market because the coin is more widely available, the value gets brought back down. So we saw them take advantage of this breakout here. So we've got the high point from this breakout occurring. Well, we see it start to go down, and then the market's tested again. The buyers start buying it back up, buying it back up. The sellers won't let it go any higher than this, gets sold back down. It receives buyer support right here. Buyers won't let it fall back down farther than this. Sellers won't let it go up past this. Gets sold back down, gets bought back up, gets sold back down. So what we actually see happen here is we have a double bottom created. It's a test. We're testing the market to see what direction it's going to go. Can it continue going upward? So that's the resistance and support we're seeing in here that occurs after a breakout. This is oftentimes a pattern that has to happen to test whether coming out of this, if the market is going to be going up or going to continue going back down. So what's going to happen? So we've met some resistance. It's basically creating a new level of resistance and support in the market, a new level of what will become historical resistance and support that will then dictate where the market's going in the future. So it's being tested to see if the market will receive enough buyer support to drive the market back up, or if it's going to receive more seller resistance to drive it back down. And you can see we create a very equal double top here and an equal double bottom. And like I said, it doesn't have to be 100% accurate here, but you see the trend. You see what's happening here. So that's a double top and a double bottom, which oftentimes occurs when the market is being tested to see if it can sustain continual bull trend growth, or if it's going to receive seller resistance and keep going back down when there's no buyer support. And we obviously see the volume that goes along with this. When this breakout occurred, there's more volume. You can see the candlesticks. You can see how big they are. That's what's happening with your double bottom, double top, and why it happens. Now, next thing we'll talk about real quick are the breakouts. So if we zoom in, I'm going to go ahead and just delete this one, delete this one, and delete this one. And we'll talk about breakouts, breakdowns, and how you can take advantage of this. So the last video, we learned about bull trends, bear trends. And we talked a little bit about breakouts, but we're going to talk about it more now. What happens with a breakout is it breaks away from a historical level of resistance and support. Once again, we can see here where my cursor is. We can see along this line, we have met buyer support, seller resistance 1, 2, 3 times in here, and a little bit farther back in here as well. This is a great time to invest. Typically what happens during a breakout is we receive an upward trend briefly, followed by a small tank sometimes, or a little bit of seller resistance. So if we zoom in, we actually see that that happens here. So I'm going to keep zooming in. We see it starts to break out right in here. It goes from here, it goes up, it goes up, it goes up, but not tons of volume. Little bit of volume spike right here, little bit. You can see barely, little bit here, and then decreases for a sec. Great opportunity to have bought anywhere back in here when we have already seen. If the future hadn't happened yet and we were back here in September 12th of 2016, about a year before I'm recording this here, we would have known by now, we would have seen the flat line, we would have seen that, okay, historically, the market has proven that the coin won't go lower than this. It's met its lowest resistance, it's met its lowest support, or excuse me, it's met its lowest buyer resistance and its lowest seller support. It's met that. Because we are here back in December 12th of 2016, we would have seen this as a prime opportunity to invest, because at this point, with the data the chart would have shown us by that point, we would have seen a historical level of resistance and support showing that the market can't break through this low. It just can't. It hasn't. This would have been a good opportunity to buy. You would have seen it go up, and by this point, we're seeing that it's broke through its previous level of seller resistance. It's broke through it. We're moving up. It's broke through it. So you can see that candle ends right there, and it's just a little bit higher than the seller resistance from back there, and it keeps going up. It continues to go up here, and then it tanks a little bit. Another opportunity to buy, and then boom. Often what happens, this isn't a very exaggerated example right here, but often what happens on a breakout is it starts to break out, and then it receives a little bit of seller resistance, saying, no, we want to sell right now, we want to take advantage, we want to make some sales right now. It drives back down the market briefly, which we should see as another prime opportunity to invest, and then it massively goes up. And that's exactly what we saw happen here. If we zoom out, we can probably find another opportunity where that happened, perhaps back in here, right in here. Okay, like here's an example right here. We have a historical level of buyer support, seller resistance between right here and right here. Would have seen that as a prime opportunity to invest. Notice once again, this is very similar to what we just showed here. It's very similar. See that? Very similar. Historical level of buyer support, seller resistance. It's the same right here and right here. It's very similar here as well. It's apparent. We would have seen this as a time to invest, and then a breakaway occurs. It breaks through that. It breaks through that. The buyers break through it. They buy up the market. Huge. And we see this huge upper shadow. And oftentimes a huge upper shadow, as we've learned before in the earlier modules, a huge upper shadow on a green bar, on a green candlestick, in an upward bull moving market, a huge upper shadow often signifies that it's been overbought and it will come back down. Well, what we've seen here, historical level of buyer support, seller resistance, so we know great time to invest. It breaks away, has a breakout. Would have been a great time to make a sale right here. Enter the trade right here. Make a sale. Because we see such a huge upper shadow on this green candle right here, a very good sign when we've seen this is much bigger than any recent activity in the market for months. Huge. That signifies that it's been overbought and it will not sustain itself there. Comes back down. Great time to buy again. Continues to go up. Continues to go up. Great time. So oftentimes during a breakout, there will be multiple opportunities along that breakout, along that upward bull trend. There's usually multiple opportunities to make profits. Now, if we zoom out here, we go from here all the way down to right here, or to actually better serve This, for training purposes, will go here. We see that this is a trend. We see that from the beginning of this trend right here, we see that it goes up, 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 down. We see a point breaking through. We see a point approaching again. We see another point. We see 1, 2, 3 points. That is a bull trend right there. Now, oftentimes, along a breakout in a bull trend, breakouts are always in bull trends, oftentimes we will see multiple opportunities to make investments or enter a trade due to recognizing the historical level of support and resistance that we found here and knowing it's historical because it's done it in the past before here and farther back in this chart. We would have seen that more back in here. Due to that, we would have known this was a pretty good time to invest. It goes up. We maybe make a nice sale right in here. This signifies with this upper shadow on this green candlestick, it's been immensely overbought. There's tons of volume, and now it's going to tank for a second again. Another great time to buy here because we know that this is an upward trend. We sense it. We can now sense that this is a breakout. So even though buying in here isn't very low on the market relative to the rest of this down here, because we know it's going in a bull trend and because we know it's on a breakaway, we know that in the near future it's probable to continue going back up. Therefore, it's not a huge risk to invest and buy more somewhere in here. It goes up, we make a sell. It tanks down, we make a buy again. It goes up, we make a sell. Now at this point, notice a couple things. You have had 1, 2, 3. You've had 3 points. What do 3 points mean? 3 points are historically what makes something a trend. So this is a 3-point bull trend. Whereas down here, or perhaps this right here, going from here all the way down to here, we would see that that is a bear trend. Going maybe 1 point up, you could consider that. 2 points right here, down again, up again, down again, up again. Well, here's what typically happens. After the third or fourth point in a bull trend, it typically becomes riskier to enter into a trade because it's usually by the third or fourth point in a trend that it's about to head the other direction. Now that third or fourth point could be over a week time span. Maybe the bull market lasted for a week or a day, or it could have been 6 months. Nonetheless, history has proven that typically speaking, after the third or fourth point in a bull trend, also after the third or fourth point in a bear trend, it typically is about to switch directions. So we can see here that we've had 1 point here, 2 points here, and 3 apparent points here. They're very apparent. We can see. Here's the beginning of our bull market right here. It goes up, breaks way through, comes down, and almost breaks through again. That's a second point. We know that's a point because it comes down again, and then it goes through again. That's 3 points. And so we have 3 points here. Look what happened. A very low volume. And this is also a big sign here. This was the largest volume candle yet during this bull trend. And it was also the third. It basically was the third and final. When the fourth opened, at this point, I would have seen that the volume has slowed down. It would have been very apparent. I'm active in the market right now. I'm seeing I can make a huge profit. And all of a sudden, I notice the volume is slowed down. Look at this right here. Look at it's flat. It's completely flat right there, right below that cycle. It's completely flat. That would have been a huge indication. Oh shit. Let's pull out now. Let's sell. Because what's about to happen in the future is a bear trend. And that's what happens. So take note. When you see a breakaway based on historical points of seller resistance and buyer support, as we've seen in here, and we knew this was a historical point of seller resistance and buyer support. We knew that's what was happening here based on what we'd seen in the past. We would know that this is a prime opportunity to invest. We would know that going up, if this turns into a trend, there's going to be multiple opportunities to buy low and sell high. We would have bought here, sold here. It would have gone down, we would have had an opportunity to buy again. Would have gone down, would have had an opportunity to buy again. And then it went up, had a massive increase in volume. We noticed that this was the third point, creating the trend in our bull market. And we noticed when the fourth cycle opened, the fourth candlestick opened, and this green one closed, we noticed that there was very little amount of volume, and this was the fourth and final point of our bull trend. We would have known sell, because stuff is about to go south, and it did. This is how you can capitalize on breakouts, and this is how you can capitalize on bull trends, seeking and identifying opportunities along the way and knowing when to not be greedy and to sell out right then. Identifying these patterns can allow you to create opportunities along the entire way. And once again, usually at a breakout, there's usually going to be a point where it comes back down for a second and then spikes back up. That is what we saw here. Multiple points to buy low and sell high. Likewise, we can also make money going into a bear trend. So it starts tanking, it starts tanking, it starts tanking, it starts tanking. Well, what happened here? Do you see what happened here? There was some controversy. There was some green, some red, some green, some red. What can be concluded from that? If we take this right about in the middle here, and we draw a line, we can see a new level. See, because what happened here with this breakout is the market was tested. It was tested. Can it sustain continuing to grow higher, continuing to go up? The buyers bought it up. The sellers released coin back into the market, making it widely available, drove back down the value of the market, and it created a new level of buyer support and seller resistance. If I've been able to conclude now that right here, during this bull trend, if I was able to conclude that right here there was a new level of buyer support, seller resistance, I don't want to say I can assume, but I wouldn't be surprised if when this does move into a bear market as it has here, I wouldn't be surprised that we meet the same level of buyer support and seller resistance, which we did. And we met that all the way from April 13th of 2015 all the way to August 3rd of 2015. We had 4 months of this, creating opportunities. Coming in, buying here, selling here, 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 right? And then we see that it's just red, 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 red. And at that point, I would have said, okay, let's not doing anything here for 2 reasons. I'm not seeing any buyer support in here like I was right here, right here, and right here. And I'm also seeing a substantial decrease in volume, meaning tight trades. Tight trades. Not a whole lot of room to trade when you've got a very small candlestick like this and this and this and this and this, or even this. But a lot of room here, a lot of room here, some room here, some room here, some room here, some room here, and definitely some room here as well. So that's what we're seeing when identifying breakouts, bull trends, bear markets, and the signals with historical resistance and support. And this all goes with timing your exits. Where are you going to exit? How do you know when to exit? Well, we knew when to exit here when we saw a massive spike, a breakout from historical resistance, coming down, testing, creating a new area of resistance and support, and then buyers pushing up the market, huge amount of volume, and then opening a new cycle, seeing that the volume has stopped. That would have been the turnaround point. Plus, we knew it was the fourth point in the cycle. We would have known exit here based on what we have just learned. And this proves it. This graph literally proves what I just said there. Goes down, we would have known to exit right here. But we also would have known, because we kind of met some support and some resistance both right here for the very first time at this level. What does that mean? That could be a suggestion that even coming into this bear market, we might meet the same thing. And we did. So we would have seen that as an opportunity, even though this isn't low like this level of historical resistance and support. We know that because this was triggered and created a new level of seller resistance, buyer support, it might happen again in this bear market. It did, so we took advantage of it. So it really is all about taking this data and knowing your exit strategy right here. your entrance strategy right here, and your opportunities right here, and right here in a bull market, and right here, and right here, and right here in a bear market. The next thing that we want to look at is something called moving averages, okay? So you see these lines that I've put on here. We've got this lighter blue, this purple, and this yellow. The ones to look at are the top and bottom ones. So we have a simple moving average, and then we have an exponential moving average. You notice that this yellow one moves a little bit more slowly. It's not as tight. It kind of wanders around a little bit. And then you can notice the blue one here, how it's much tighter. It kind of follows the price, follows the chart a little bit more. So that's your exponential moving average. And then the yellow is your simple moving average. What can be drawn from these? What can be drawn from these is a change in momentum, or a change in volume, or the direction rather. So if you look where they cross, so say for example, the most significant one can be seen right down here. If you look where they cross, you see we've actually gone from, we had a little bit of a bull market right here, a little bit of a bull market. And then there's a change, they cross, you see? And it's a change in momentum. Now we're moving into a bear market. And then they cross again. This is a great signal, a great indicator, because notice it crossed before it went up into an immense, huge upward trending bull market. If we would have been able to put our indicators on here, or excuse me, put our moving averages on here, we would have been able to see, okay, there's a change in momentum here. And granted, we might have not known that it was going to go up this high, but along with other pattern recognition, historical points of resistance and support, knowing what Bitcoin is doing, if perhaps Bitcoin is going way down right now in value when this happened, or going way up, that could have contributed to this, if it was news on the particular coin or the media getting involved. Any other suggestions or indicators, and seeing this momentum change would have been a good suggestion to go, hey, let's keep an eye on this. This might continue going up. Maybe we should buy some right now. So these moving averages are a tool that you can use, and it's pretty simple. If you go into Coinigy here, once again, I'm on Coinigy right here, you have some options to do this. So you can click this chart right here, this little chart icon, and you've got these indicators, and you can type in moving average. And the ones that I selected are moving average exponential, and then just the regular moving average. So you're just going to get the simple moving average, and you're going to get the exponential moving average. The exponential moving average is designed to follow the market more closely, while the moving average is just kind of flowing, right? And then once you have those in there, you can actually change, I'll blow this back up, and you can change the intervals at which they hit at. So this exponential one is actually designed to hit like 30 points. I've set it to hit 30 different points of reference in here. And then the simple moving average, I've designed it to only hit a few. So you can see 1, 2, 3, 4, 5, 6. It's going to be 13. Whereas the other one, if I click it, you're going to see that it's designed to hit many, many more. You can see all these points in here. And you can actually change that by right-clicking on it, going to Format, and in Inputs, and changing it. So I have this at 13 right here, and then I have this yellow one. Let's take a look. I have that one at, yellow, Format. I have that one at 30, okay? And where these cross is a very, very critical point. You notice that they cross. It's a change in momentum. It looks like they're about to cross again here. Time will tell, but it could be a momentum change, because what we're seeing in here is, looks like a new point of resistance and support. The market's being tested. We could actually probably pull a double bottom, double top from here. We see a huge breakaway right here, and yes, I do see a double top, double bottom. You can see it right here to here, and you can see it again right here and here. That's happening, and you can see in between that there's been a new line of support and resistance right in here. So we can actually see that. But in any case, Where these lines cross with your moving averages are critical points to take note of. It's yet again just another clue or a hint as to what could be happening. It symbolizes a change of direction in momentum, okay? It symbolizes a change of direction in momentum where the moving averages cross. So you'll want to use the simple moving average, which is just moving average in Coinergy, and the exponential moving average. You should set your exponential moving average to 13 and your simple to 30. That way it will differentiate, and you'll have one that follows the chart and the prices a little bit more closely, and one that kind of just flows with the direction. Where they cross will symbolize a change in momentum. The next thing that we want to talk about is head and shoulder patterns. So let's actually find a head and shoulder pattern on here. I'm sure we can find one. Let's zoom way, way, way out and go into perhaps a 1-year market, and we'll find a head and shoulder pattern. So let's zoom in a little bit. Okay, I see one right in here. So head and shoulder pattern. Here is the bottom of the shoulder. Here is top of the shoulder. Here is the head, and here is top of the shoulder, bottom of the shoulder again. We can see that that's a fairly consistent pattern right there. It's almost symmetrical right here. So what we're seeing is basically a spike, kind of a bull moving trend, and we're seeing it hit the top right here and just go way down. Huge decrease in direction right there, and it's switching directions, lots of volume going on, but nonetheless it doesn't really matter so much about that. What matters is actually identifying this. So we see a head and shoulder pattern, two shoulders, left shoulder, right shoulder, and then the head, of course, being at the top. So what we're seeing in here is simply a spike right here hitting a pinnacle, buyers driving the price upwards, and then we see a sellout. It's probably been overbought, sellers now selling, driving back down the market, and then it meets some resistance support, seeing if it can sustain that. Buyers drive it back up, and back up even higher, comes back down to what is now a new level of historical resistance and support, goes back up again, comes back down, thus creating left shoulder, head, right shoulder. That is a head and shoulder pattern. And along in here, we see opportunities. Where are the opportunities? We've seen that we've had it go up into a bull moving trend. We've seen it spike and then drop immediately. Invest. We see that it goes up again, it spikes, sell. We see that it drops again, buy, and then we even see some more opportunity to create another sell right in here. Recognizing a head and shoulder pattern, very good. If you learn to recognize it in the past, it's a very good signal that it can happen in the future. So this is a head and shoulder pattern, which sometimes is harder to spot or really uses something to suggest where the market is going. But it's something that you can use and identify to be able to see opportunities to enter and exit a trade, where you basically are seeing the market go up, bull market being immediately brought back down by the sellers, and then brought back up again, receiving buyer support, meeting some resistance, but receiving some buyer support, a lot of it, more so than seller resistance, tons of it, reaching a pinnacle point, which would have been a great sell point, and then coming back down again where you could have made a decision to buy again and make a little bit of profits here, exiting the head and shoulder pattern. The next tool that I want to bring up is called RSI. Once again, you can go back, you can exit this, and you can click that little chart icon right here and just type in RSI, this icon right here for indicators. And then go back out to full screen and we'll see RSI. RSI stands for Relative Strength Index. It's on a scale of 0 to 100. What we can actually pull from this in data, see this number right here? It says 45.5055. So we can see this line right here. There's this line right here. We can see where it breaks through there, and it breaks through there, it breaks through there, breaks through quite a bit there, okay? And then we can also see another line here where it breaks through the bottom side of it, and it breaks through the bottom side of it quite a bit down here. notice that this level right here is, let's see, right there is about 70, right? Somewhere right around here is 70. This is 61. This is 73. So we got about 70 right in here, okay? And then this being 100 way up at the top, okay? Whereas right down here, this is probably somewhere around 30. Yep, see that? 30. And then this is 0 right down here. So we have 0 to 100 all the way up to the top. And then we kind of have most of the activity in here in between around 30 and 70. Something to write down. Typically speaking, anything above 70 often means that it's being overbought. 70 to 100 often means that it's being overbought. So what we can often see in here with RSI is yet again another clue or an indicator as to what might happen. It's a very good way to judge if the market's going to tank and go into a bear trend or if it's going to go up into a bull trend. So oftentimes when we see it break through this line here on the upside, we know that it's probably going to go back down because it's been overbought. That's what it usually means. 70 to 100 on the RSI, which once again is relative strength index, often means that it's overbought and is a signal that it's likely to go back down through this line and tank and kind of level out to a previous level of buyer support or seller resistance, which it kind of did in here. So this is an opportunity to see, okay, well, do I want to enter into a trade or do I want to exit? What do I want to do? Oftentimes, when it goes through the lower RSI line right here, anything under 30 means it's oversold. So it's been sold so much that it has no choice but to actually go back up and receive more buyer support. It's been sold so much, driving down the value of the coin, that it's going to be bought back up because it's such a great deal. It's such a low value that people are going to invest in it. So that's what happens here. We see it break through and we see a massive, massive, massive bull trend with tons of opportunity. And you can see that this chart right here, in terms of vertically lining it up, it matches up. Look at this. That's what happened here. That's what happened. And then we see right here, it's probably got overbought, and we can also tell that because see this long upper wick that's very apparent, this long upper shadow, that oftentimes means that it's been overbought. So it has no choice but to go back down and find some resistance and kind of level out again. And that's what happened. It broke through and it came back down, and it broke through again, and then it went on a massive bear trend and it went way down. Way, way, way down. And if I had seen it come down here and I'd seen it start to level out in here, and maybe this part of the chart was showing and I hadn't had this data yet, I would have bought down here because it's been down here a while now. It's going to go back up because history's proven it doesn't stay down here very long. It's been oversold. Great opportunity, low value. It's not worth that much right now, and it's going to go back up. So that's how to use RSI to your benefit, relative strength index. Now, with all this in mind, here is something to take note of, and please listen closely. When entering a trade or thinking of buying into a coin, you should have a couple good indicators suggesting which direction the market is going to go. For example, identifying historical levels of former resistance and support. Is where the coin is at right now very close or in a historical level of buyer support and seller resistance? If so, maybe a good indicator that's a good time to invest. Have we seen that we're about to come into a breakout? Does it look like we're going into a breakout where oftentimes there's going to be a breakout, it's going to be a little bit of resistance, and either prior to that breakout or just after, great time to buy? Do we recognize any head and shoulder trends? Do we see anything like that? Do we see that it seems to be a trending bull market? What's happening with the value of Bitcoin right now? Is it up or down? Is it going down and we start to see the market increasing? That might be partially why. Do we see that the media or news, or do we see endorsements going towards a specific coin? Do we see any sort of sponsorships? Is there anything that the coin is actually doing to progress further into the market, creating more value? I suggest that when trading, you use a minimum two, more than likely three indicators to know if it's a good time to invest and enter a trade, if it's a good time to exit a trade. Likewise, is it a good time to exit a trade? You know how we talked about this trend? A very apparent sign. We see it go up, we see 1 point here, 2 points here, 3 points here, a huge amount of volume, and then it flatlines here. That would have been a very good indicator. Hey, I'm on the third point. I know usually, oftentimes, the third or fourth point, it's about to flip directions and the volume has decreased. Another indicator, another hint, another suggestion. Maybe I should sell. So try to have 3 suggestions or indicators kind of pointing towards whether you should have an entrance into a trade or an exit into the trade. Now, the last thing that we want to talk about is the Adam and Eve pattern. The Adam and Eve double bottom, which is oftentimes a signal or an indicator that we are going to transition from a bear market trend back into a bull market. So here I'm actually on the 1-day graph here, and we can see that predominantly this is a bull market right here because we see mostly green. We can see this is predominantly a red market here because we can see mostly red. And then we're seeing mostly red again in here. So this area right in from here to here is a very, predominantly speaking, it's a very bearish trend. Okay, we can see that we have mostly red right in here. Mostly red, especially apparent right in this area right here. We see that, okay? We see that we are moving into a bear market, It's pretty apparent right here, especially right in here, okay? So I want to point out that trend. We see that we've had a predominant bull market right in here, very green. And then we see mostly a red market, a little bit of a bull market right here, but then it's just red again, red again, red again, red again, okay? Here is a great indicator for what is about to happen and what more often than not happens with the Adam and Eve double bottom. So the Adam and Eve double bottom is typically a trend reversal sign coming out of a bear market. It is a sign that you can use to predict or make a very educated decision on what is about to happen in the future with the market. So coming out of a bear market, first of all, we see, I'm going to zoom in here, we see it hit a bottom right here. And it's often recognized by a capitulation candle, which is very apparent. And a capitulation candle is a candle that has a very strong lower wick or lower shadow, and oftentimes has no upper shadow at all. We see that in this guy right here. I'm going to zoom in a little bit. You see this right here, and I'll even point it out so you guys can see. It's this one right here. It's that right there. That green candle right there is what we call a capitulation candle, right? It's a green candle or red candle that has a very long lower wick, all right? Usually green coming into an Adam and Eve double bottom. What this is signaling is a trend reversal. So oftentimes what has to happen before it goes into a bull market again is we'll meet a little bit of resistance. The buyers will give it a little bit of support. It'll come back down, meet some seller resistance, thus hitting the bottom twice, and it will bounce back up. Adam and Eve double bottoms only occur when you have a bear market going into them. So it's apparent, once again, I will recap this a little bit. We have a bear market happening. It's predominantly red, predominantly red, predominantly red. We have a capitulation candle right here, which is often noted not only by the long lower wick right here, the very apparent long lower wick, but also an increase in volume. And if we see right in here, we see an increase in volume. Right here in this area, we see an increase in volume, all right, compared to right here. We see a volume increase right here, going up and going up, all right? And this volume increase is from 86 Bitcoin to a spike of 101 Bitcoin volume for that time. So it goes up 15 Bitcoin in volume. It hits bottom, right? It goes up, receives some buyer support, comes back down, and it hits bottom again right here, where we see it happen again. That is a good indicator for what is about to happen in the market. An Adam and Eve double bottom. Adam starts, Eve can't help but follow, and it happens again right there. That is an Adam and Eve double bottom, and that signifies moving into an upward trending bull market, and that's what happens right here. So we have a bear market entry, sellers selling down the market, sellers in control of the market, not receiving buyer support, hits bottom, meets some support, meets some resistance, does a little bit of that, finds some buyer support, seller resistance in here, bottoms out again in the same parallel, the same level that it entered in with this capitulation candle. All right, the capitulation candle noted by its very apparent long lower wick and its increase in volume. This senses a trend reversal from a bear market to go into a bull market. And now what do we see? We see it proven. It goes up into a predominantly green, green meaning bull, green meaning buyer support, going up, and we see an immense opportunity to sell. We see a huge increase in the value, and we would have been able to make a huge profit right in there. That is the Adam and Eve double bottom, which is a signal of a bear market about to change direction and go into a bull market. Once again, to recap, we see a bear market predominantly red. We see it hit a low point right here where we see a capitulation candle which has a very predominant, very apparent lower wick, lower shadow. To prove that, we see a spike in volume. If we go right here and we look up kind of at the top left of the chart, there's a blue piece of writing that says 80, get accurate with it, 85.37, and then we see right here 101.31. We see a 16 Bitcoin volume spike. We receive a little buyer support, seller resistance. It fiddles around right in there for a little bit, trying to find some buyer support, seller resistance. It meets bottom again, right? Proving another historical point of seller resistance, buyer support. It parallels its first entrance into the Adam and Eve double bottom. Adam starts, Eve follows, and we see a trend reversal into a bullish market where we see predominantly green and an immense opportunity to sell and make a huge trade. That is the Adam and Eve double bottom, and that concludes the advanced trading part of this training series. The next parts we're going to talk about are coin research and coins to invest in. Why? What type of research do we have to have before we invest in a coin? What's going to make a smart, intelligent decision when about to invest into a coin? How do we know what coins to invest in? And I'm actually going to be talking about some good long-term and short-term coins that you could invest in right now when the opportunity presents itself at a low investment point. We'll see you in the next video.